Hashtag how to pay less taxes legally. Book, 0 to 5 seconds. The average American throws away $2,847 every single year in taxes they didn't have to pay. Not to some scam. To the government. Because they don't know 3 legal moves that everyone should be doing. I'm about to show you exactly what they are. Intro, 5 to 10 seconds. Look, I'm not a tax guy. I'm just someone who got tired of watching my paycheck disappear. So I researched this obsessively. What I found shocked me. The IRS literally gives you permission to reduce your taxes. You just have to ask correctly. And that's what we're breaking down today. Part 1, max out your 401k, 50 to 80 seconds. Here's the first move, contribute to your 401k at work. Most people do the bare minimum to get the company match. That's leaving money on the table. The 2024 limit is $23,500. If you're 50 or older, you can add another $7,500. That money comes directly out of your paycheck before taxes are calculated. Let me show you what this actually means. Say you make $65,000 a year. You contribute $10,000 to your 401k. Your taxable income isn't $65,000 anymore. It's $55,000. At a 22% tax bracket, that's $2,200 less in taxes. Every single year. And here's the best part: that $10,000 is growing in the market tax-free until you retire. Free compounding. Free growth. No taxes on gains. The move is simple: contribute as much as you can afford to your 401k. Don't just stop at the match. Push higher. Part 2, open a Roth IRA, 60 to 90 seconds. Now, here's where people get confused. Your 401k reduces your taxes right now. That's called a tax deduction. A Roth IRA works differently. You contribute after tax money. Buta Euro, and this is Yugi Euro. Every dollar you make in that account is 100% tax-free forever. The 2024 limit is $7,000. If you're over 50, it's $8,000. Imagine you're 30 years old. You open a Roth IRA at Fidelity or Vanguard. You invest $7,000 in an S&P 500 index fund. The market averages 10% returns annually. By the time you're 65, that $7,000 becomes roughly $236,000. You pay zero taxes on that $236,000. Zero. Compare that to a taxable brokerage account where you'd owe capital gains tax on those gains. That's roughly 15 to 20% of your profits gone. The move: max your 401k first to reduce taxes now. Then max your Roth IRA to eliminate taxes forever. Part 3, tax loss harvesting, 60 to 80 seconds. This one's underrated and most people have never heard of it. Tax loss harvesting is when you deliberately sell an investment at a loss to offset gains you made elsewhere. The IRS allows this. Here's the real scenario. You bought $5,000 of a stock in January. It's now worth $4,200. That's an $800 loss. You also made $1,200 profit on another investment this year. You sell the losing stock. You now have an $800 loss and a $1,200 gain. Net gain, $400. You only pay taxes on $400 instead of $1,200. At 15% capital gains tax, that just saved you $120. And here's the bonus: you can write off up to $3,000 of losses against your regular income each year. If you lost $5,000 total in your brokerage account, you deduct $3,000 from your income and carry forward $2,000 to next year. You can do this in Robinhood, Fidelity, Schwab, or any major broker. The move: review your brokerage portfolio at year-end. Sell losses strategically. Reinvest immediately in similar, not identical, funds to stay in the market. The math: 20 to 30 seconds. Combine all three. Max your 401k, $23,500 tax reduction equals roughly $5,170 in taxes saved, at 22% bracket. Max your Roth, $7,000 invested equals potentially hundreds of thousands tax-free. Tax loss harvest, average $2,000 offset equals $300 to $400 in annual tax savings. That's roughly $5,500 minimum per year. Over 30 years of compound growth, you're looking at hundreds of thousands of dollars. Dash. Call to action, 20 to 30 seconds. These aren't loopholes. They're not gray area. The IRS literally designed these strategies so you'd use them. The only question is, will you? Start today. Open a 401k if your employer offers it. Open a Roth IRA. Set up tax loss harvesting. These 3 moves are how you actually keep more of what you earn. If this video helped you, smash that like button and subscribe. We drop personal finance strategies like this every single week. Thanks for watching. Let's go make smarter money decisions.